is this just kicking the can down the road? I know I don't like using that phrase, but it's evident.
I don't think. I seriously, good morning both. I seriously think, I don't think it's kicking the can down the road. I think what the government is trying to do is try to restore the market confidence and to also try to avoid the market-wide collapsing. So what I'm trying to see is that the government is going to be so selective of providing the liquidity into the selective developers. Over the past 18 months, we do see some developers actually are enhance their balance sheet. For those developers, will be able to access the credits. And for those travel-ish one, not healthy-ish one, I think probably they're going to face some headwinds. But overall, I have to say, we have to realize the fact, construction, residential-led of economic growth is likely to come into the end. And the headwinds definitely in the residential sectors for sure.
But it's really masking a lot of other issues here. Surely, Henry, I mean, the demographic challenge facing these developers is something that they really have to address. They've overbuilt, and that, of course, has implications for the wider economy, especially local governments.
Yeah, that's definitely for sure. I think demographic is definitely the two sides of the stories. If you look at the metro areas and mega cities, I think we continue to see the population inflow to those mega cities. On the other hand, when you will talk about oversupply, those seem to be on the so-called lower tier cities, mismatched product. I think a few years ago, we keep saying for those lower tier cities, overbuilt, those localized developers is likely to facing some headwinds. I think the government's stand is very, very different now. 2015-16, they are helping. But now they are not helping at all. Three red line policy is so powerful. As a result, volatility, I'm afraid, is going to be continued. We might going to see some more defaults going forward.
Give us some perspective on that. How bad would defaults be going forward? When you take a look at yields, they've surged, especially junk bonds they've surged more than 20% right now, making it even more difficult for companies to pay back.
Yeah, you are right. I think for developers, what we are working for our clients, we look at the developers, there's a few viable options. It's number one, looking at the underlying asset and those land bank. Some of the land bank they are holding is quite valuable. So what we are seeing is they are going to dispose those assets to enhance the balance sheet to pay off the debt. And you can see the monetary easing policy coming introduced by the government, potentially going to provide more liquidity to those healthier developers. So in my mind, in 2022, we are expecting to see some consolidation in the residential property developer sectors. So MMAs, in my mind, is coming to the car.
We know that China's growth going forward will be boosted by innovation, will be boosted by tech. Give us a sense of how this will impact demand for perhaps commercial real estate. What assumptions are you making?
I think commercial real estate market is in the early stage for booming. I have to say, if you look at the U.S. commercial real estate market size, it was 11 trillion US dollars. China, being the second biggest economy, is only 3.8 trillion, a third of the size of the US. As a result, we are seeing more and more investors are tapping into the commercial spaces, particularly logistic, tech, cold storages, data centers, as well as life sciences. All those investors are tapping into these spaces. I think residential-led growth is coming to the end, but we are very confident to see the growth coming from the commercial real estate spaces.
For foreign investors looking to put their money in China's real estate sector, where should they be putting their money, Henry?
I have to say, demographic really is important. Follow government's policies, even crucial for investing into China. I think for China, we pretty much like 4 clusters, Beijing clusters, Shanghai clusters, and Greater Bay. Plus, and Chengdu clusters, and those 4 clusters is going to be a lot more powerful, a lot more prosperity, and going forward.
Henry, what about the investability of this sector? This is key. And, you know, the number of traders I've talked to say that it is uninvestable. In fact, there's no interest in the property side of things, or indeed quite a lot of China anyway. What's your take?
I think those asset classes is very investable. I can tell you that just from 2020 to 2021, we look at the commercial spaces, the transaction volume has increased by 15 to 20% for 2021. The growth momentum will continue. And the center and the heart of investors' love is really the cold storage and logistics and business park, which is what tech companies, what the life science company love to be there. And going forward, we are expecting to see even more interest is coming for, such as the data centers, such as the build to rent, the multifamily as well. So I think they are investable, and just in an earlier stage, investors need to partner with the local developers, local operators to tap into this space.